Hello everyone, welcome to the last lecture of Debentures. Now, as such, the chapter was over in the last lecture, but in college in this year only, they have taken one more new point. So, all of you in the summary take out redemption of debentures part. One more method they have taken in redemption of debentures, that is purchase in open market. Purchase of your own debentures in open market. Okay, give this point also in the summary, mention this point also in the summary. Purchase of debentures in open market. So this new point we are going to cover today and finish with the chapter. You can give that heading in your notebooks, purchase of debentures in open market, point number E. Okay, sinking fund we had already seen in the last lecture. So today we take up with this point. Give the heading every one of you. Point number E, purchase of debentures, own debentures from open market. And in bracket you all mention for immediate cancellation. For immediate cancellation means you purchase the debentures and you cancel your own old debentures issued. So no more liability remains from company's point of view. Here automatically the redemption takes place because from the stock market you buy the shares. Same way from the open market you buy back your own debentures. Now when you buy back your own debentures, then you have to repay the money to yourself only. So indirectly the money of debentures automatically gets repaid. When does the company do this, or when does the company purchase its own debentures for immediate cancellation? When company feels that it does not want to bear any more the burden of liability of interest. Suppose company has borrowed debentures for 7 years period, and after 4 years company believes that they have sufficient money, they have sufficient funds. They don't want to bear interest for the next 3 years. But debenture holders will not take the money back after 4 years because they are going to be repaid after 7 years. Why will they also lose the interest for the next 3 years when they know that the company is financially sound? Here, if the company wants to get free from the burden of paying interest for the last 3 years, then company can buy back its own debentures from the open market and cancel the existing debentures. That's why I mentioned for existing debentures immediate cancellation also. So indirectly, company purchases the debentures from open market, cancels its existing debentures liability, and becomes free from the burden of paying interest for the remaining pending number of years. This is the motive or intention behind buying its own debentures from the open market. Now, what all entries we will pass? We are concerned with the accounting part mainly from exam point of view. So, all of you write on first entry will be for purchase of own debentures. Okay, give this heading in your notebooks for purchase of own debentures. Now the entry will be debentures comes in, debit what comes in. So own debentures account debit. I repeat, debentures comes in, debit what comes in, but the name of account will not be debentures account. It will be own debentures account debit, and bank is the giver. We'll have to make the payment through bank mode. So bank is the giver, credit the giver to bank account. This entry is to be passed with the purchase price including all expenses like brokerage. Means whatever is the final cost for the company, that is going to be recorded. So this entry will be passed including brokerage. Okay, own debentures account debit to bank account. Now as we purchase it for immediate cancellation, so for cancellation of debentures the entry will be, okay, for cancellation of debentures the entry will be, see, existing liability of debentures have credit balance, okay, that you will reverse and debit to cancel it. So existing debentures account debit, and own debentures, this account you will reverse and credit. So existing debentures you cancel with your own debentures. So to own debentures account. Okay, old liability of debentures, which is a credit balance, you will reverse and debit. And this own debentures, what we purchased, that we will reverse and credit. So that liability gets cancelled. But debentures would be at face value and this purchase price may be more than or less than face value. So whatever is the difference amount, okay, if it remains in debit, then transfer it to loss on cancellation of debentures account. If I repeat, the difference amount balancing figure remains in debit column, then transfer it to loss on cancellation of debentures account. And if it remains in credit column, that means it's your profit, then you transfer it to gain on cancellation of debentures account. I repeat it again, listen carefully. This purchase price from the open market may be more than 100 rupees of face value, or it may be less than 100 rupees of face value. Okay, in that situation there will be difference in debit and credit amount. If you have purchased the debentures at less than 100 rupees, it is your profit, so that debit amount will be more, credit amount will be less. So in credit, the balancing figure remaining will be transferred to gain on cancellation of debentures account. If from the open market you have purchased at more than 100 rupees, then credit will be more and debit will be less. So balancing figure remaining in debit column, you will transfer to loss on cancellation of debentures account. Okay. Then third entry. Now, if there is loss, then that will be transferred to profit and loss account. If there is loss, then that will be transferred to profit and loss account. So for transferring loss on cancellation, the entry will be, okay, if there is loss, then that will be transferred to profit and loss account. So loss account which we had debited, we will reverse and credit. Loss account which we had debited, we will reverse and credit, and we will transfer it to our profit and loss account. So profit and loss account debit to loss on cancellation of debentures account. Okay, profit and loss account debit to loss on cancellation of debentures account. And if there is profit, then that is our capital profit in nature, so that will not be transferred to P&L account. If there is gain, then that will be transferred to capital reserve account. So for transferring gain on cancellation, the entry will be, okay, loss would be met with P&L account, but gain would be transferred to capital reserve account. So for transferring gain on cancellation, the entry will become gain we credited. Okay, gain was credited, so that you will reverse and debit. Gain on cancellation of debentures account debit. Gain was credited, so to close it, you will reverse and debit it. So gain on cancellation of debentures account debit, and you will transfer that to capital reserve account. Because it is your capital profit in nature, you'll transfer it to capital reserve account. Okay. Then after that, you will be paying the interest to the remaining debenture holders after cancellation. Maybe you are not able to buy from open market all the debentures, but only part of the debentures. Then for the remaining debentures, you will have to pay interest. So for interest payment from company's behalf, for interest on remaining debentures which are not cancelled. For interest on remaining debentures which are not cancelled, two entries will be passed. First, interest on debenture is an expense for the company, debit all expenses and losses. So interest on debentures account debit, and amount is payable to debenture holders, credit the payables. So to debenture holders account. And then for payment of interest, this is the interest becomes due. For payment of interest, the entry will become debenture holders are the receiver, debit the receiver, debenture holders account debit, and will pay bank to bank transfers. So bank is the giver, credit the giver to bank account. And lastly, at the end of the year, even this interest expense will be closed and transferred to P&L account. So for that, the entry will be for closing the interest on debentures, the entry will be interest account, you will reverse and credit and you transfer it to profit and loss account. So profit and loss account debit, okay, profit and loss account debit to interest on debentures account. Profit and loss account debit to interest on debentures account. So once again, every one of you go through the things properly, what entries are to be passed for this. Very first, for buying your own debentures from the open market, the entries, debentures comes in, debit what comes in, own debentures account debit. Bank is the giver, credit the giver to bank account with the purchase price, which may be including brokerage, etc. Then for cancelling of your existing debentures, the entry would be this debentures existing liability you will reverse and debit, and this own debentures you will reverse and credit. So debentures account debit to own debentures account. Now here two situations are possible. Either you buy, that is purchase price is more than the face value or less than the face value. If it is more than the face value, it's your loss. So you will debit loss on cancellation of debentures account. If it is less than the face value, then you are at a profit. Then you'll credit gain on cancellation of debentures account. Now if there is a loss, you'll transfer to P&L account. So profit and loss account debit to loss on cancellation of debentures account. And instead of loss, if there is a gain, then that is a capital profit in nature. So you'll transfer to capital reserve. So gain on cancellation of debentures account debit to capital reserve account. Now, every debenture you may not be able to purchase from the open market. Maybe everyone is not willing to sell. So whichever are the pending and remaining debentures, on that you will have to continue to pay the interest. For that, the entry will be interest is an expense, debit all expenses and losses, interest on debentures account debit. Amount is payable to debenture holders, credit the payable to debenture holders account. And then for the payment of that interest, debenture holders are the receiver, debit the receiver, debenture holders account debit. Bank is the giver, credit the giver to bank account. Lastly, this interest also we will close and transfer to P&L account. So for that, profit and loss account debit to interest on debentures account. So these entries are to be passed when we purchase our own debentures from open market for immediate cancellation. Now, there are two extra questions done in college. For this, we'll be taking it up. Right now, it is not covered in the study material given to you. So I have downloaded those two questions in the You Will Learn app. I've uploaded rather. You can download those two questions PDF file from the You Will Learn app, and it will be included in the study material of Unit 4, which you can collect from the branches. So in that, these two extra questions would be included. Right now, you may not be having it. Then you can download it from the You Will Learn app. In this lecture itself, along with this lecture itself, that file will also be available in the You Will Learn app. So first you download that file, then we solve this question. Yes, these are the two extra questions we are going to take up. In case if you are not able to download also from the You Will Learn app, then you can take the screenshot of these questions. Question 10 and 11 we are going to solve. Right now, take the screenshot of this question if you are not able to download. Be attentive. On 1st April 2019, SUD Limited had 2,000 10% debentures of 100 each. Total existing 2000 10% debentures are there. Now on 1st October 2019, company purchased 700 own debentures at rupees 95 for immediate cancellation. Okay, we discussed that they are purchased for immediate cancellation, so that second entry of own debentures cancellation will be passed. Interest on debentures is payable half yearly on 30th September and 31st March. Okay, interest on debenture is payable half yearly on 30th September and 31st March. So what all entries would be passed? Understand this. Make the format of journal entries in the books of SUD Limited, everyone. One page format, make it fast. I hope all of you have done the format. Now, we don't have to pass the entry for issue of debentures. Company had. Had means they had already issued in past and this was the balance of debentures at that point of time. So in this particular year, in the chronological order, very first entry will come on 30th September 2019 for paying the interest. Okay, very first entry will come on 30th September 2019 for paying the interest. What are the two dates of interest? One date is 30th September, the other is 31st March. So in the order, first transaction what is taking place is 30th September. Second transaction what is taking place is on 1st October. And then the transaction is on 31st March for paying the interest. Okay. So on 30th September, company will be paying interest on all 2000 debentures because by 30th September, no debentures are purchased. On 1st October, the debentures are purchased. So until 30th September, company has the liability on all 2000 debentures to pay interest. Interest on debentures is an expense. Debit all expenses and losses. So interest on debentures account debit. Amount is payable to debenture holders. Credit the payable to debenture holders account. Now there are 2000 debentures. Into 100 rupees is face value. Into 10% is the rate of interest. Okay. So 2000 into 100, 2 lakhs. 2 lakhs into 10%, 20,000. The amount of interest will come to 20,000. Okay, I'm sorry. Amount will not come to 20,000. Right now we have to pay for only 6 months. On 30th September we have to pay for 6 months. So further it will come into 6 divided by 12. For 6 months it will come to 10,000. Okay, it will come to 6 divided by 12. So 10,000. I hope everyone is clear with this. I repeat it. There are 2000 debentures of rupees 100 each. So 2000 into 100, 2 lakhs is the face value. 10% is the rate of interest. And on 30th September, you'll be paying the interest for 6 months. Which 6 months? April, May, June, July, August, September. So for 6 months, the interest would be into 6 by 12, 10,000. Being interest due on debentures. Now, same date 39/19 will make the payment also. So debenture holders are the receiver. Debit the receiver. Debenture holders account debit 10,000 and bank is the giver. Credit the giver to bank account 10,000. Okay, so after that we'll make the payment. First debentures interest becomes due and then full 10,000 will be paid also. So debenture holders to bank being interest amount paid to debenture holders. Okay, so these two entries we have done on 30th September. Now in the order, on 1st October 2019, we have purchased our own debentures. How many debentures have we purchased? We have purchased 700 debentures and at what price? 95 rupees. So we'll pass entry for that. What entry did we discuss just now for buying your own debentures? Own debentures comes in debit. What comes in? So own debentures account debit and 700 debentures are purchased at 95 rupees. Okay, 700 debentures are purchased at 95 rupees. So that value comes to 66,500. Bank is the giver, credit the giver to bank account with the same amount 66,500. being 700 own debentures purchased at the rate of rupees 95. Now, on same date 1/10/19, it is given for immediate cancellation. This we have written for immediate cancellation. Means on the same date, 1st October, we will cancel the existing debentures also. So for immediate cancellation means the entry will be existing debentures at 10% debentures. We discussed 10% debentures have credit, balance will reverse and debit them. 10% debentures account debit. Now debentures always with face value. So 700 debentures which we have purchased, we will cancel. 700 into 100, the amount will be 70,000. Now, to own debentures account. Own debentures we have purchased for 66,500. Okay, this own debentures we have purchased for 66,500, which we will cancel. And remaining is our profit because we have purchased at a lower price. I repeat, as we have purchased at a lower price, remaining amount will be our profit. So for that, we'll transfer it to gain on cancellation of debentures account with the difference amount of 3,500. As I discussed with you, if difference remains in debit column, it's our loss, we'll transfer to loss on cancellation of debentures. If difference remains in credit column, it is our profit. So that will be transferred to gain on cancellation of debentures account. B, debentures cancelled with own debentures. Then on same date 1/10/19, gain account, this gain of rupees 3,500 will be closed and transferred to capital reserve account. As we discussed, loss would be transferred to P&L account, gain would be transferred to capital reserve account. So gain on cancellation of debentures account debit with 3,500 to capital reserve account 3,500. Okay, this gain will be transferred to capital reserve account, being gain on cancellation transferred to capital reserve. Now after that, okay, after 1st October all entries are passed. Now on 31st March, third entry. On 31st March, company will again pay the interest on remaining debentures. How many remaining debentures? Out of 2,000, company has purchased 700 debentures. Means on 31st March, 2,000 minus 700, company will have to pay interest only on 1,300 debentures. Out of 2,000, company has purchased 700 debentures. So company will have to pay interest on 31st March only on 1,300 debentures. So for that, the entry will be passed for paying the interest on 1,300 debentures. Interest on debentures is an expense. Debit all expenses and losses. So interest on debentures account debit. Amount is payable to debenture holders. Credit the payable, so to debenture holders account. Now, 1,300 debentures, okay, as we calculated earlier, 1,300 debentures into 100 rupees face value into 10% interest into 6 divided by 12. Now we have to pay interest only for 6 months again. So 6 divided by 12, that comes to 6,500. Okay, so 6,500 interest would become payable on remaining 1,300 debentures. I hope everyone is clear with this calculation. Out of 2,700 debentures are purchased. So on 31st March, now we have to pay interest only on 1,300 debentures. So 1,300 debentures into face value 100 into rate of interest 10% into 6 months. So 6 divided by 12, 6,500. And then for the payment of this interest on 31st March 19, the entry will be debenture holders are the receiver, debit the receiver, debenture holders account debit with 6,500. Bank is the giver, credit the giver to bank account 6,500. Being interest paid to debenture holders. Okay, here I forgot to write the narration. Here the narration would come as being interest due on debentures. Now, on 31st March, we'll transfer the interest to profit and loss account. So for that, the entry will be profit and loss account debit to interest on debentures account. Okay, these interest on debentures which we have debited, which amounts? These amounts. This interest on debenture of 10,000 plus this interest on debenture of 6,500 which we have debited, that we will credit to and transfer to profit and loss account. So what will be the amount for that? Which amounts 10,000 first entry's amount plus, okay, first entry's amount of 10,000 plus 6,500. So total what will transfer to profit and loss account is 16,500. Now final B, interest on debentures, being interest on debentures transferred to profit and loss account. Okay, being interest on debentures transferred to profit and loss account. Now final total would be, do it everyone, 10,000 plus 10,000, 20,000, 20,000 plus 66,500, 86,500 plus 70, 1,56,500 plus 3,500, 1,60,000 plus 13, 1,73, 1,83, 1,89,500. Okay, 1,89,500. Now, very simple question. So 11th question, again all of you take the screenshot. If you have not downloaded that file, extra file, you can take the screenshot. I'll discuss this question with you, and similar to question 10, all of you try completely on your own, and then you play the video and you'll find the solution in front of you. So you verify whether your solution is right or not. But all of you try this question entirely on your own. In examinations paper set, you'll not find any extra practice for this, because this is a new topic taken for the first time in the current year. So you'll not find any extra question for this. Try this itself on your own. On 1st April 2019, Max Limited had 1,012% debentures of rupees 100 each. On 1st October 2019, the company purchased 450 owned debentures at rupees 93 for immediate cancellation. Interest on debentures is again payable half yearly on 30th September and 31st March. Same order. First you'll pass the two entries of interest on 30th September. Then you'll pass how many entries? Purchase of owned debentures on 1st October, cancellation, then it's profit or loss. 3 entries you'll pass on 1st October. One for purchasing owned debentures, second for cancellation, and third for transferring its profit or loss. And then on 31st March, last set of entries. Again on 31st March, you'll pass interest on remaining debentures. How many remaining debentures? Out of 1,000, you purchased 450. So on 31st March, 1,000 minus 450, you'll be paying interest on 550 debentures. So you'll calculate the interest on debentures, taking how many debentures in consideration? 550. Whereas on 30th September, you'll pay interest on all 1,000 debentures. Okay. So this 31st March, you'll again pass 2 entries for interest and then transferring to P&L account, means 3 entries on 31st March. Pause the video and solve this question completely on your own. Then play the video and find the answers in front of you and check it whether you did it right or not. I hope you all would have done the solution by now. Check your answers. On 39/19, interest on debentures account debit to debenture holders account. 1,000 debentures are there, so 1,000 debentures into face value 100 into rate of interest 12%. And on 30th September, April to September, you'll pay interest only for 6 months. So 6 by 12, 6,000 rupees. Interest on debentures to debenture holders 6,000, and then for its payment, debenture holders account debit 6,000 to bank account 6,000. Then on 1st October you buy back your own debentures. So own debentures to bank. Now it is given in the question 450 own debentures are purchased at 93 rupees. So 450 into 93, 41,850. Then existing 10% debentures account you will debit. So 450 debentures you have purchased for cancellation. 450 into 100 face value 45,000. This own debentures 41,850 you will reverse and credit. And since the difference of 3150 remains in credit column, you will transfer to gain on cancellation of debentures account. Since there is gain on cancellation of debentures account same date, gain on cancellation of debentures you will reverse in debit and transfer it to capital reserve. Now again on 31st March you will pay interest on remaining debentures as we discussed. 1000 minus 450 you have to pay interest now on 550 debentures. So interest on debentures account debit to debenture holders account. 550 debentures into face value 100 into rate of interest 12%. Okay, rate of interest is 12% and into 6 months interest. So 6 divided by 12, that would come equal to 3,300. Okay, so 3,300 must be the interest on debentures to debenture holders amount. Then that interest we are supposed to pay. So debenture holders account debit 3,300 to bank account 3,300. Same interest we are supposed to pay. So debenture holders to bank 3,300. And then at the end of the year, this interest of 6,000 plus this interest of 3,300, that is 9,300 we will transfer to profit and loss. So profit and loss account debit to interest on debentures account 6,000 plus 3,300, that is equal to 9,300. Okay, and the total would come to accordingly 6,000 plus 6,000 plus 41,850 plus 45,000 plus 3,150 plus 3,300 plus 3,300 plus 9,300. So that would come to 1,17,900. Okay, total of journal would be 1,17,900. So with this, the chapter of debentures gets completely over. Now in the next lecture, we'll start with the new chapter. That'll be all for this lecture. Bye everyone. Take care. See you in the next lecture.